Okay, so I think we can proceed. Our focus
Okay.
today will be on how to trade a ranging market. We
Okay.
discussed in our last class that ranging market is a market that is characterized with movement between the support and the resistance zone. And another major feature of a range is that it moves horizontally, as if the market is moving from the left-hand side of the screen to the right-hand side of the screen. That's one of the characteristics of a ranging market. It's why people call it a sideways market. And we also said the reason why we have a range is mostly because it's a period of either the market is resting, right? Buyers and sellers are equally strong, or they are both equally weak. So we might likely see a range in that regard. So in other words, it's more like a period of struggle in the market. And you don't really know who is going to win, whether the buyers or the sellers. So that's basically why we have a ranging market. So today now, we'll now discuss, okay, how do we now know, since they are both of equal strength, and then you can't escape having a ranging market because this market is always going to occur, at least we said about 60% of the time. So something that gives you 60 out of 100, definitely what it means is it's an opportunity, huge one, to make money, right? You won't be saying, oh, I'm not going to trade a ranging market, because if 60 out of 100 is gone, meaning trending markets and choppy markets would only make 100%. Those ones are going to be sharing it. Did you understand? So it's why it's important we understand how to trade it. So let's write down. There are about 3 basic ways to trade a ranging market. There are about 3 basic ways to trade a ranging market. And there one, buy at the support of the range. And sell at the resistance of the range.
Okay.
So in front of that, let's explain. Once you've cited an area on the market where buyers and sellers are pushing the prices in an horizontal manner, buy around the resistance zone, sell around the resistance zone. In front of that, now open a bracket and put where.
I was drawing. I got lost. I was drawing this thing. Sorry. Please, can you repeat?
Okay, so where did you stop last?
I stopped at where you had buy range and support of the range and sell at the resistance of the range.
Okay. In front of that, I now said that is when the market is moving in an horizontal manner,
when the market is moving in an okay,
you sell at the resistance. In front of that, now open brackets, like you want to write something in bracket. That is where you still sell candles. starting from where you see candles starting from.
When you sell candles starting at what?
That is where you see or where you've seen sell candles starting from in the past. I'm going to explain that later, then close the bracket. That is where you've seen sell candles starting from in the past. Then close the bracket.
Okay.
Then buy around the support area.
Buy around the support area.
Yes.
Okay.
In front of that, you open a bracket and write that is where you've seen buy candles. Start from in the past. Close it also.
Okay.
Now, the next line, put notes, still under this. Note, the disadvantage of this method, note. Note, the disadvantage of this method is that the range can be overshot. Is that the boundaries, write it this way, that is the boundaries of the range can be overshot. Thereby giving a false impression of a breakout. Thereby giving a false impression of a breakout. Instead of trying to draw this thing, you can just cremon to this page and have it like a picture you can fall back to. And you remember the recording.
Yeah.
Okay, so now let me explain that. Now, remember when we were beginning our studies on Forex, one of the conditions why we buy and sell, we said we buy at the support zone and we sell at the resistance. We also established that the support zone is where buyers have come into the market in the past and push the prices up. So if you know, I marked out this box area right now as a support or a buying zone. Notice the blue lines are the buyers, the red are sellers. So meaning I can buy it by this third time because I've seen that these happen once, twice. Meaning buying moves happen around this area once and twice. So by this third time, when the market sold into this same zone, I bought. Did you get it? So the same thing for the resistance. I could sell around this red zone because in the past, I've seen sellers push the price down once, twice. By this third time, when buyers are pushing it up, I'll also be waiting to sell. So that's one of the easiest ways of selling and buying in the range. But the problem of this method is, just like the road, we said boundaries can be overshot. Remember we said if support is not a price line. Like I gave an example that in December in Nigeria, there is always a Harmattan, right? Probably when you people are experiencing winter, it's not just in one day. It's like it could happen in a week or even a month, during a month. So now imagine the first time this market bought, right on this box area, which is marked as a support area, was where it went up from. Another time, still around the same zone. But look at the third time, it came a little lower before going up. But that little lower it came was still within the zone, which is the box that we regarded as our support zone. So the person will still have been right. Another time again, it came into the box area, which is our support zone too, and it still bought. But look at this part, the last one. Can you see that sellers broke below that buy area? As in that sell move came below the blue box. Hope you saw that. Can you see this?
Yeah. Yeah, yes, I've seen this. Yes.
Ordinarily, before, someone would have thought, oh, sellers have broken the zone. Because when you were marking support, you marked between this price and this price. But the truth was, this same zone was still a buy zone. And you see that buyers will push up from there right later. So what we mean is sometimes what you mark as support, the market can still go a little bit below it, or if it's in the case of a resistance, it can still go a little bit above, meaning you can't define precisely where that boundary should end. Do you get? So it now gives you an so you think, oh, anything that makes it close above here now is no longer a resistance. Meanwhile, if it closes a little bit and then still drops down, that zone is still a resistance. So because you cannot tell the prices of the support as on the border of it, the range of it precisely, it gives you an impression that, oh, they've broken this support or they might have broken this resistance. Do you understand? That's the problem with this method. Because naturally, if I was buying here before, I bought here before, I bought here, I could place my price for entry anywhere within, I could put it in the middle of this, my box range price. So let's say this is about 1.5, and then this lower part was like 1.3. I will now say my stop loss, I can put it below that 1.3, saying anything that makes market come below 1.3, then it's no longer buying. Meaning I would have set my stop loss probably around 1.1. Do you get? So by saying if the market comes here, let it close that trade, it means it wants to sell. So imagine now, I now put my stop loss at 1.1, this place. Can you see just a little bit away from my marked support zone? Only for market to come and sell, hit my stop loss, and then start buying from that same place. So in other words, it's like saying even that 1.1 I set my stop loss was still within the buy region. Do you understand now? That's how we said the disadvantage of this is the boundaries can be overshot. So you might not be precise with this method.
So if it's like this now, the person will be at the loss.
Exactly. But if you did not overshot and probably you set it in the middle, in the middle, of course, should have made profits. Do you understand that? So where do you now put your take profits when you buy and sell this way? Now, right, the take profits.
Did you say to take profits?
Yes. You know, when you buy or sell, you have to take profit now to set a profit target. So now, right, the take profit when you buy at the support zone.
When you buy at a support zone.
Yes, meaning when you buy the support inside this range now, when you buy the support in the range, could be set around the middle of the range, could be the middle of the range, or the next resistance zone, or the next resistance zone. Full stop.
Okay.
Well, the take profit when you sell can also be in the middle of the range, or the next support zone. Full stop.
So let me see. To take profit when you at the support zone could be okay. Okay. Yeah, no, I was just reading what I wrote.
Okay, so now let me explain that now. As I say, when we buy around the support zone, right?
Support zone is also buyer zone, right?
Yes, exactly. Support is where push the prices up. Why resistance is a sell zone.
Mm.
So let's say I was buying around the support zone right now, which is the buy zone. Remember, anytime you buy, your goal is that the market should go up higher than you bought it. That's the way you can
Mhm.
give. So if I buy here, I will not immediately put my stop CP here. I'm not going to take profit. Why? Because what if market does not get here? Look at it in the past. It got here. The next time it went higher. Another time it went higher. But the next time again, it didn't get here. So if I put my CP directly here, what if the market turns back, let's say around here? You know, here, so it's still close to the resistance zone around there.
Mm.
Let me say. So to be on the safer side, I would always say just look at the middle of the range. Put a line there. Whatever price is there, I'll first take that profit away. Using this method of buying support, selling resistance.
Mm.
But I want to be greedy. I cannot move it a little bit up, but I will not let it get to the lowest point this market sold from the past. So looking at this, 1, 2, these were the lowest points it touched before it came down. So I would move my TP a little bit away from me. So instead of setting my TP here, when I'm buying from this low, I could just move it a little bit away from this lowest point. So in case it's not touching it precisely, if it gets here, my trade will still close. Do you get the point now? So I could set it around here. Do you understand? When it's
Mhm.
close to the distance, in case anything wants to happen. But if I want to play safe, I'm already okay with the middle of this ring. So whatever price is here on the chart, I'll use it as my TP. Set my TP. Did you get that part? If I was
Yeah,
selling,
okay.
good.
Okay.
If I was selling to the same thing, if I'm coming from this resistance, remember anytime you sell, you want the prices to keep going down. So I will also calculate that I could be okay with this profit level here in the middle of the ring, whatever price I use it, or I make it go a little bit down. I will now look at the past. Each time you sold, what was the lowest it got? For all the time you sold, this was the lowest point it got. Can you see? The one that touched it. Because the others went a little bit lower. This one even went a little bit lower. Then this last sell move went even deeper. But I can't tell. What if this time it also wants to turn back at this lowest point and not get here? Do you get? So in that case, if this was the lowest point, I'll set my TP somewhere very close to that lowest point. I could just put it around here so that I will get out just before it gets here. Do you understand? Because if I've been selling all the way down, we are now approaching a buyer zone. Meaning buyers can take over the market from there. So I want to get out before the buyers get in, since I have been selling. Do you understand?
Mm.
So that's
No,
how.
I have. Okay. Now I have a question. You see, as you said, in when you're moving towards the resistance, like you set it first for that long one, the one in the middle, just to
Yes,
take the money then and just be that's being on the safe side. So
yes.
if one takes the money, the second arrow which you just deleted, can you actually still take money from there? Or once you've taken money, that's
No,
all. Or
okay, once you've closed the first one, you can't
yeah.
take one again at the lowest one, except, let's say this currency now was Euro
Mm-hmm.
GB USD. You were
Mm-hmm.
selling. Maybe you now enter the sell twice. Maybe the first time you
Oh.
clicked USD sell once, the second time again you click USD again. That's you took two trades on just the same Euro USD. So you
No.
can use place it, meaning the first Euro USD, you can set the profit target to be in the middle. The second
Mm-hmm.
Euro, you can now set it to go a little bit lower. Now you've taken two trades. So the one that will close first is the one in the middle. Because the market is coming all the way up, it will get to the one in the middle before going lower. Do you get? So by the time this one closes, this one is still running. So if you now get to this one to better, on this second one, you will make more money than you did on this because this one went lower. Do you understand now? So that's another
Yeah.
way. It's called swing trading. Meaning taking two positions on one trade idea. Okay. So that's for this method. And of course, the stop loss, you can just use your idea. If I was selling from this resistance zone, of course, my stop loss should be above the zone. because anything that makes sales go above the resistance zone, meaning buyers are the ones pushing it up. So if this was my resistance zone, let's say this place was number 10, I could set my stop loss around let's say 10.5. Do you understand? Just give it a little space away from that resistance zone. And if I was buying, I want the buyers to push the market up. So let's say this place was 1.3. I could set my stop loss around, let's say 1 precisely. Just give it a little bit of space. Do you understand? Away from the support. Do you get now? So your stop loss now will be below the buy zone in a buy. And your stop loss for yourself will be above the sell zone itself. Does that make sense now? So that's for this first method of trading. But then for me, this is not the best. So let me give you the second way we trade the ranging markets.
Okay.
We could trade the range on the breakout of the range. We could trade the range on the breakout, either to the upside, the breakout either to the upside or downside. First up.
Either to the left side or downside.
Either to the upside or downside. They are just two range. This is the up and this is the down range.
Okay.
So in front of that, now write that is if the resistance, that is if buyers break above the resistance. That is if buyers break above the resistance, you join the buy.
Did you say, sorry, did you say break?
Yes, that is if buyers break above the resistance, you buy. You buy. On the close of the candle that broke. On the close of the candle that broke above. On the close of the candle that broke above.
Okay.
And if a sell candle breaks the support zone, and if a sell candle breaks the support zone, we sell.
Breaks the support
breaks
zone.
Breaks, yes. It breaks the support zone. We sell. We sell. Now put a bracket. No, not bracket now. The next line. Note, when using this method, always wait for the candle to close clearly above or below the zone. Always wait for the candle to close clearly above or below the zone, respectively.
Always wait for the candle to close
above the zone before buying or selling, respectively. Before buying or selling, respectively. First up.
Yeah.
So let me explain this now. Remember we said a range is as a result of equal strength between buyers and sellers, is it not? It's like both of them are still struggling. So instead of me also putting my money in a game or in the market where I'll be struggling because I don't know who is going to be the winner, eventually. I'll wait for one of them to break out first. That breakout is like saying, imagine these two football teams. This blue side is Chelsea. This red side is Man U. I want, before I put my money, because both of them are strong, I want one to score first. Whichever score the first time, I will automatically agree that that's it. I will conclude that that's the one I'm going to put my money on because they scored first. So I will assume that they are the stronger or the better team. Do you understand? So in other words, that scoring means when buyers push the prices up, this is like the goalpost, the sellers, that's the resistance zone. That's like where sellers coming. So it's like their goalpost. So whatever make the buyers break above their goalpost is like saying they've scored 1-0. So when I now wait, I see a buy candle that is closing above this zone. Remember, this zone is where I used to see sell candles coming down before. But when buyers push the price up, the sellers were weak, and these guys close above their zone with the buy candle. Immediately that candle closes, it's like saying, okay, they are no longer struggling. One of them scored for the first time. I want to follow the direction of that one that scored the first time. So immediately that candle closes, I will join and buy immediately. Do you understand? So I'll just jump in and buy because this candle closed above the support zone. And if it was sellers that also broke and closed below this buy area, as long as the candle close outside, it's sell candle closes. I think sellers now scored in the goalpost of these buyers. Do you understand? So I will join the sell immediately and start selling. Are we together? Does that make sense? Do you understand that explanation of what you wrote? But no, did this explanation, did it make sense?
Makes sense to an extent.
It makes sense. Okay, to an extent. Good. This is the assumption because whoever breaks first, we believe, is the one that got more strength. If I've been struggling with an opponent for like 8 hours, of which this range market might have been taking days, right? So the more they've been struggling back and forth, the more one is supposed to have been getting weaker. So if one was weak, the one that breaks first gathers strength. And that strength, it means it gives him hope that he can still win more. Do you understand? Because the other one might not have strength to push back again. So in that case, I would assume that, okay, since this one overcame, let me follow his direction. Let me put my money on this. Do you understand now? So when you now buy in this situation, if it breaks to the upside, how do you know where to set your profit target? It's simple. You look to the left in the past, you'll see a zone that was higher than where you entered. That next zone is where you set your TP. So write this down. Note.
Yeah. Okay.
Buy. Using this
method?
This second way of trading the range. That's what I mean. Using this method. Come on. To set your profit target, that's your TP. Just right, to set your TP. Look to the left in the past. Look to the left in the past and see a zone that went higher than your entry
area. Yes, I think I've stopped comparing notes by using this method to set your TP.
Come on.
What did I write? TP something method. What was that? Profit
no, the
method
is this second way of buying and selling. You know, our topic is how to trade a range. The first way of doing it was you buy within the support and sell within the resistance. That one was good. This second way, now what we said, wait for the breakout. Do you understand? Wait for the upside and downside. So if that is what I'm now explaining by using this method, meaning by using the method of the breakout, You get the point now? That's what I mean by using this method to set the profit. Now look to your left and look for a zone that is higher than your entry price. I'll show you all of that on the chat later. You get my point. And use
Okay,
that.
let me refresh. Okay, no, let me rephrase what you have written. By using this method to select your profit, yeah,
Yes.
to select your TP. That's it, eh?
Yes.
Is it TP or profit? Which one?
Still the same. TP is the same as take profit now.
Okay. Oh.
You get now.
So
Now the point is you've not been refreshing your notes. So everything is looking frozen. By now you should be familiar that what we call profit
I should. Take
to set your TP. Look to the left. Have you written that?
Look to the left, yeah.
In the past. And notice a zone or look for a zone that is higher than your entry. Let me give you what I mean. Let me try and illustrate what I mean. Let me see if I can do that. Let me change. Don't draw yet. Let me explain. Remember the reasons why we have a ranging market that we discussed. There is a period of rest when the market has been good. So let's say this market was trending down before, meaning it was moving down. Then after moving down for a long period of time, it decided to take a rest. So meaning this was a downtrend. Good. In this downtrend, there was a zone here. Remember, zone is where buyers came in, meaning a buy was coming from here. There was another zone here where sellers came down. Are you seeing it? Good. There was another one here. When after the market bought is sold. Can you see all those zones? So now, this market broke to the upside here. I want to buy here. Now, remember I said when it closed to the upside, you join the buy. I bought here, but I can't use this place as my TP again, like the first way of trading the range. So this time I'll just look to the left in the past before we had this range. I'll now look if this is my entry, because the last candle closed here. The candle that said buy closed right here, right? Meaning as it's closing, I'm also entering for a buy. Are we still together? So meaning if I enter for a buy, I'm coming. Let me change this color. The color is not changing. I'm very changing to blue. I don't know why it's doing that. So maybe my entry would also be around here. So let's assume that I enter for a buy. Immediately this candle close. Maybe this is also my entry area. I'm entering the buy immediately here. I'm supposed to keep going up, but I don't want to keep buying blindly. I want to see where is the next so that I can have a bus stop. I will now look to the left of the screen in the past. So this, it cannot be here because here is below where I entered. Then what of this next one? Okay, good. I'll now trace it. If you trace this red line now to pass here, can you see? This is good. It's like the next zone. So buying here, I could use this price around this line as my first take profits. So let's say I enter the buy twice, buy. You know the way we used an example the other time that you can take 2 trades on one idea.
Yeah.
And now twice. This would be my first TP. These are my first. And I was like, this one is too small, Jare. Which other one is bigger? I look again to the left. After this zone, this was the next I zone, So I trace the line again, coming here towards a good. I think I prefer this one. So when I buy, this will be my first TP for the first trade. This one, I can use my second TP for the next trade again. Do you understand? Remember, you look to the left to get your profit target. Do you understand now? So in this case, where would your stop loss now be? It's simple. Always answer yourself, ask yourself that, okay, what am I buying in the first place? I'm buying because buyers broke out of this zone. So meaning anything that makes sellers push this market back inside the zone, below the zone, then the market is no longer buying. So my stop loss will be just below the zone inside the market. This will now be my stop loss below that zone. It's like saying I'm expecting this market to buy. I'm entering here. That makes it reverse and start coming down, then it's no longer buying. So let the market stop my loss and just leave it. Do you understand? Do you get down? So for this way, that's how you set your profit target and also get your stop loss. Now the third way, but for me, this is not still the best way. Why? Because the fact that buyers push the market price up the first time is not a guarantee that they are the ones being strong at the end of the day. I went to see a football match where both teams were struggling at first, then one suddenly scored the first time, only for the opponent again to score back, then we have a draw. And at the end of the day, that opponent again would now be the one to score again. You now have 2-1 and they are leading. Haven't you seen such scenarios in a football game? So before I put my money in the forex market, I want to be sure that if you are the one that wants to claim being strong after the range, prove it at least twice so that I know that, okay, you scored the first time, you scored the second time, and you're still with it. I now follow your direction. So that takes us to the third way of trading the range, which to me is the best, and that's what I do basically. So let's try the third way. Wait for a breakout and retest. Wait for a break and retest. Now let's explain that. Open a column. That's it. If the market breaks to the upside, let that zone be retested a second time.
Let's that one.
That zone. Remember where we are breaking now is a zone, right? Let that be retested a second time. Before you buy. Before you buy. And if it's now, this is like the next line. And if the market is breaking to the downside, let that market be retested before you sell.
Let that market be retested, right? Before you sell.
Before you sell. First up. So remember when we said to the downside, sellers are the one that push price down. That's why we said wait for a sell. And if it's breaking up, buyers are the ones that always push price up. That's why they wait before you buy. So what do I mean? This market broke the first time, right? Let's say, let me erase this. So let's say buyers push this price up, like we saw here, it didn't. But this is just the first. Now, imagine in a football game, if one opponent scores, what do you think the others are also trying to do? They also want to retaliate immediately. So the buyers just broke the goalpost. Let me call this resistance area, goalpost of the sellers. Sellers still will not just hold their arms. They also want to reclaim their goalpost or their territory back. So as this went up, sellers are also likely to try to push the market price down. That movement down is what we call the retest. But by the time they push down, if they are struggling and the buyers do not allow them to push down below this range before the buyers suddenly take over. Meaning, as the sellers came into this box area, you know this box area, this line I drew is like an extension of this box area, right? Are you with me?
Yeah, yeah.
Buyers now came out, you suddenly see a buy candle. Also on top of that area that comes out, sorry, let me be so very well. So sellers push it down, all of a sudden you see a buy candle that also comes up and closes above that same resistance zone. In this case, it's like saying buyers have proven a second time that they are strong. Are we together? At this point, I will now buy with confidence, knowing that buyers are strong. Am I making sense? So that's what we mean by wait for a retest. Mean the market broke to the upside. You also allow the market to prove that it's still winning. So this happened, a break, a retest, and a buy move. So for you to buy, you must see a buy candle that tells you buy. If a buy candle does not form on top of it, don't buy. Of course, when we get to candlesticks, you will know the type of candles you should see that will let you join that buy. So indirectly now, this is like saying a new trend is forming, which is going to be an uptrend because it's a trend. Remember, when we were treating range, we said you will normally find a ranging market at the beginning of a new trend or at the end of an existing one, or when the market is just resting. Do you understand? Good. So this is the best method. When the market breaks out, wait for a retest before you join the buy. And in this case, your stop loss will still be the same place where it was before, below the range. Meaning anything that makes sellers to have pushed the buy price down below this range or resistance zone, then the market is no longer buying. So your stop loss will still be below that range. Do you understand? And your profit target will still be based on what you did here. You look to the left in the past. The way you set it for the second way of trading is still the same. So when I buy it, of course, this is the next one. This could be TP1, and look to the left in the past again. I trace it, whatever price is there, TP2. Maybe if I'm taking the trade twice. Do you understand? But let's say it broke to the downside. If you broke to the downside, it means sellers were the one who pushed the price down. So if I saw something like this, oh, sorry. So let's say something like this happened. It's sold, clearly breaking this support. I'll not just jump in the sell. I know the buyers will also try to struggle to reclaim their territory back. So I'll wait for this to happen. The buyers to push the price back here. As long as they are not able to close back inside the zone, right? I now want to see another sell candle that comes out from here. So if the sell candle comes out from there, not allowing the buyers to push back inside this range, I will join the sell move. These are saying, good, my guys are strong. So I'll also sell, right? This could be the first TP because this was the next zone. Then another zone. If I'm still selling, I'll look, it keep going lower. What would I do? I'll look to the left in the past. Where was the lowest point this market gets to? I'll also use that as my TP. And of course, in this case, my stop loss will be, since I'm selling, as I say, anything that makes buyers put the price back inside this range, then it's no longer selling. So in this case, my stop loss would also be around here. Do you get the point now? Does it make sense? It's not complicated. It's not.
Yeah. Hello?
Yeah, I'm with you. Okay.
Yeah.
So it's if you follow the concept of if I'm selling, I want it to keep going down. Anything that pushes it back up means it's no longer selling as long as it's back inside the range. That's why my stop loss is above the range. Anything that makes it push back down when it's buying, it's like saying it's no longer buying. That's why my stop loss is also below that resistance. That's the concept. So now let me show you an example of this retest on the screen. So write this. This is always write this in your notes. This is the best method of trading the range. So even if you have plenty methods, there are ways there are more than one ways to a place, or the way they used to say, more than one, but it's always better when you go through the best routes. Do you get? So this is the best route for that move. Okay.
Oh, excuse me. Yeah.
Sorry.
Oh, it's okay.
We're almost we've sent one out. Let's just show you this thing on the chart. This is just for how to trade. And we can do it today. Let me know when you start seeing my screen.
Are you showing a different thing from this drawing?
I intend to. I'm making myself
okay. It's not yet.
Yes. I want to show us the chart. Okay, you're seeing a different screen now, isn't it? Okay, so good. I think I have a perfect example somewhere around it. Can you see at the top, this market was ranging in the past, true or false?
True.
By now, you know a range now, where it was moving sideways. Now, look at the border of the support and resistance. Let me pick an arrow and show you. So, this was our resistance area. If you look at the price also, sometimes just take a look at the price. Between 1.244 and 240. Can you see 240 and 244 is close to each other? I hope you know. And both of them are 1.2. Do you understand? 1.244 and 1.240. So it's like saying anywhere in between where I marked, market can sell. So if you've been using the previous part, the first way that says buy and sell the supports, sell at the resistance. Of course, you would have sold multiple times. Can you see? Market came into this zone once, sold. Another time, it touched the lower line, sold. Another time, sold. But can you see this third time was the one that got to support? That's why I said take profit in the middle. Can you see there was a point to get to the middle of this range and then went back? Can you see this time it got here? When it sold, it got to the middle, it did not get to this support. So imagine you sold from here. You now set your profit as this zone. That moment you enter from here, you would have been making profit up to this zone. All of a sudden, it reverses. When it reverses, you lose all the profit you've made. But if you had set your profit target to that middle, it would have closed you out on profit before it reversed again. Can you see it? But this other time, what happened? When you sold from here, can you see it got to the support before buying? But you don't know the one that will get there precisely. That's why I always say it's better you take profit in the middle of that range. Do you understand now? That's for that first we traded it. Now, the second one, or sorry, which is the best one, the last one. Look at this market was ranging, going up, going down within the range. All of a sudden, pay attention to this sell candle. This sell candle was the one that closed below the zone. True or false? In the past, can you see? None closed outside of it. But this red closed outside. True or false?
Yeah, true.
True. So if someone had traded using the second way, what did we say? We'll say join the sell immediately. That second way. Of course, you the profit target. I now said look to the left in the past to know your profit target. So someone who sold from here immediately the school, if they were looking to the left for their profit target, this is their profit target. This was the lowest point market got in the past. You would have just moved an horizontal line there, right? What's the price? You see the price 1.29. So it's like saying this person entered around 123, and then the market got to 120, 219, 223 and 219. That's like 40 pips profits. They would have made some profits. But it's risky because if you notice, after the market sold small, what did he do? He bought back and went back up. You get? If that person was going for maybe this particular zone, this lower one, set my profit target here. Can you see? It wouldn't have gotten here before it went up a bit back. Can you see? But the best one is wait for a retest. The retest means after it's sold, buyers pushed it back here, like I showed you. But when the buyers came and pushed it back, what happens? They could not close this buy candle or buy move, did not close back inside the zone. Remember, I told you that when it goes for a retest, as long as the buyers don't close back inside the zone and then a sell candle closes, you have your confirmation. And you see that when this is what we call a retest, this buy candle going back to the same zone to confirm, and then sellers taking over. So if I entered on this retest, my stop loss would be above this support zone. It's like saying inside of this zone. Do you get now? And of course, my take profit now, if I join this sell, I'd have sold all the way down. Can you see where it got to? So looking to the left also, because you won't know whether it will get here before turning. But all you have to do after the time you enter this cell here, you look to the left to decide what's the zone. There was a zone here, one. Can you see past this zone when it sold? Can you see? It passed this first line when it did the retest. Anytime you wait for market to do a retest, you have the market going in that direction more than when it breaks without retest. So can you see, if you had entered this trade, maybe you GBP USD sell, maybe you entered two cells on one trade idea. This would have been your first TP, TP1, which the market got there and it's. If I look to the left again, what was the lowest point it got to? This is another one here. Can you see? So I'll just put a line. Let me borrow this line for now. I'll use this. This would have been my second profit target. Which, what did the market do? It still broke, closed below the second profit. Can you see? So one, I would have taken one profit at 215, another one at 210. So imagine entering around this 223. From 223 to 215, that's first like 80 pips. Now, that pips we're doing that time, 80 pips. If you had used 0.01, that would have given you $8. Are you with me?
Yes.
Good. Now, from 223 to 210, 223, 210, that one is like 130 pips. 223 to 210. Do you get now? So that one was 130 pips. If you had used 0.01 on the second trade, that would have given you 13 pips, $13, sorry. For that 130 pips, $13. So imagine you make $8 on one, $13 on one. That's a total of 13 and 8. I'm not very good at math. That's $21. But of course, if you have a bigger capital size and use a bigger lot size, that 130 pips, if you are using 0.10, instead of making $13, my sister, you've made $130 on that one. The one of $8, you would have made $80. 80 plus 130, 210. Do you get? The bigger your lot size now, the money you are now making or losing. And because you entered around 223, your stop loss is just above this zone a bit. So maybe your stop loss is around, let's say, 228. So meaning you enter 223, your stop loss 228. That's like you are risking 50 pips. So if you risk 50 pips to go and get 100 pips and 130, is worth it. I'm risking 50 to get 100 times 2. Do you get of what I'm risking? That's a good trade setup. Or I got 130. That's like times 2.5. Do you understand? So if you have even entered this trade 3 times, if you look at the left again, in the past, there was another zone here. Can you see? That one is even way now more. So let's say that one stopped at 200. You entered at 223 to 200. That's like 230 pips. If you use 0.10 on that third trade alone, $230 done. So $230 on one, $130 on one, $80 on one. So 210 and 230, $440. And you go and rest. What are you looking for when you make $440 in one day? Do you understand, ma? What if it takes you 2 days to make it, right? To get there, you're still fine. So that's what an example of a retest. Are you with me, ma?
Yes.
Good. So that's what we mean by trading to the retest. Anytime a market breaks the zone, it always goes back to retest. That's how market works.
At
Even
the
if you
point, my brain is unable to capture too much again. It's
okay, don't
beginning
worry,
to.
we've exhausted our time for today. So what I'll do, free time, you watch this recording, it will be clear. So to
Yeah.
just do a recap, there are 3 ways we trade the what's it
Thank you.
called? The ranging market. So see you again on our next class. Let me stop the recording at this point.